Hello students, in this video today we are going to pass entries when the company is issuing shares at a premium. Now as you know, what do you mean by premium here? Premium means when the company is enjoying goodwill in the market. Let's take one example students, like suppose L&T company. Now this is a very good company, everyone knows. Now what happens when such a prominent company, well-known company is issuing shares in the market? What happens? Company would like to take a benefit of it. How? By charging extra money. Say for example, L&T company decided a face value of 100. But what company will do? Company won't collect 100 only. Company knows that they are having a very good goodwill in the market. So to get the benefit of this, they will issue these shares say for a premium of 25 rupees. So 100 is a face value, 25 is a premium money. So how much public will have to pay? Applicant will have to pay 125 rupees. Face value is 100 only students, but company is asking for extra money, which is a premium money. Now it's up to the general public. Even they know that it's a very good company earning a super profit. They have a very good business, so they don't mind paying the premium money. And they also know that in future also they are again going to expand their business. So every year the profits of the company is increasing. They don't mind to pay a premium money. But same is not the case for a company who is not good in earning a super profit. Like they are earning a profit but a normal profit, like the usual one, 10%, 15% profit. So if it is a normal profit which company is enjoying, in that case company can't ask for a premium money. So there are many company students in the market wherein they are earning a normal profit, and such companies are not in a position to charge a premium money. I would like to give you an example of a Reliance company also. There was a company they have set up called Reliance Power, and it was like they know that Reliance is enjoying a good name in the market. So what they did, they asked for a premium of 420 rupees. And you know students, what was the face value of the share? 10 rupees. So can you imagine how much extra money they have asked for? The face value is 10, but they issued it for 430 rupees. So 430 is the total money which public paid for it, and the 430, out of this 430 rupees, 10 rupees was the face value. So how much was the extra money? 420 rupees. So it was multiple times extra money was asked, and you won't believe the subscription got oversubscribed in one day itself. It got 12 times subscribed. What I mean here is, suppose company have issued 1 lakh number of shares and they received application 12 times of it. So even charging premium money, people were like crazy to buy those shares. Are you getting? So this is what I mean to explain you here, that if a company is enjoying a good name, is having a goodwill, earning a super profit, then such company do take advantage by charging premium money. So if you have understood students, you will also understand that this extra money which company is collecting is a profit for a company. Now tell me students, if it is a profit, what effect we give in our books of account when we pass journal entries? Do you remember nominal account ka rule? Yes, very good students. What is nominal account ka rule? Debit all expenses and losses, credit effect for all income and gains. Since this premium money, the extra money which company is collecting, company is getting extra money, collecting extra money, it's a profit for the company. So in company's book, what effect to give students? Yes, very good students. You are going to give credit effect, credit all incomes and gains. So we are going to credit premium money which company is collecting on the issue of shares. So this was the concept of securities premium which company is charging at the time of issue. I hope I have explained you the concept very clearly with the help of examples, and also you have understood the effect. How to record in the books? You will record premium with the credit effect. Correct? Now let's get back to this sum. Again I have designed my own sum. in this sum I have covered a premium concept which I have explained you just now. So let's start with the sum. What the sum says, a company issued 20,000 equity shares. Now what is this 20,000? It's not an amount, student. 20,000 is the number of shares issued by the company to the public of rupees 10 each. This is face value, which is also called nominal value, at a premium. This is what I explained you just before. Premium is a profit. How much profit company is asking for? 10% premium. Now remember students, always calculate this 10% on face value. How much is face value? 10 rupees. So what will be 10 rupees ka 10%? Yes, you are correct. So the premium money is rupee 1. If you calculate on face value 10 rupees, 10% premium, 10 rupees ka 10% is 1 rupee. You can use calculator, you can find out. 10 rupees ka 10% is 1 rupee. So what is 1 rupee here? Premium money. So in this sum, how much company is collecting a premium? 1 rupee per share. So how much total money is to be collected from the public? 10 rupees for the face value, 1 rupee for the premium. So total money receivable from the people, from the general public is 11 students. 10 rupees is the face value, 1 rupee is the premium money. So total 11 rupees is to be collected per share from the general public. So total how much? I said total money to be collected is 11 rupees. So let's check this installments whether this question is correct or not. On application it is asking for 2.5 rupees, allotment 4 rupees including premium students. How much premium we are asking for? 1 rupee. So 4 rupee includes 1 rupee ka premium. So I can write this way students, 3 plus 1. Now what is 3? 3 is for share money. This is share money we are asking for. 10 rupees ka share. So in that 10 rupees ka share, 3 rupees is for the share and 1 rupee is for premium. So how much total we are collecting? 4 rupees at the time of allotment. I hope you have understood. So 4 rupees you have to break up into share money and premium money. So in this 4 rupees, how much is your share money? 3 rupees. How much is your premium money? 1 rupee. That makes up 4. I hope you have understood clearly. Next installment. First call of 1.5. Final call of 3 rupees. 2.5 plus 4 plus 1.5 plus 3 gives you 11. So total money we are collecting is 11 rupees. 10 plus 1. Am I clear with this? Now what question is saying next? Applications were received for 15,000 shares only. Now pay attention. How much company offered to the public? 20,000. How much application were received? Only 15,000. We received a very less application. We offered 20,000 but we received less application. Whenever you receive less application, it is called under subscription. What it is called, students? Under subscription. And whenever it is under subscription, your entire sum you will do as per the application received. So you are going to consider application received and not the number of shares offered. So you are not going to take 20,000 and you are going to do the sum. You will take 15,000 applications only because there are only 15,000 shareholders. You won't get money for 20,000 shares. Understood? You received application for 15,000. So money will be also received as per the 15,000. So entire sum you have to consider 15,000 shares only. And this type of sum is called under subscription. So remember student, if in exam they give you under subscription ka sum, you have to solve entire sum with the application received. Am I clear with this? Let's move ahead. All calls were made. So we are going to pass entries for all the installments. Duly received means there are no shareholder not paying any call money. We are going to take this later in the next sum. wherein the shareholder is not paying you a money. That is a different concept and different entries to be passed. Here all the shareholders have paid the money. Past journal entries. As you know, we are going to pass bank entry first and then the transfer entry. This is for application. So you always pass bank entry first and then the transfer entry for application. What to do for rest of the installments? It's reverse. You will first pass transfer entry and then you will pass bank entry. This is what we have done in previous sum, also in previous video. So first installment always bank entry first and then the transfer entry. For rest of the installment it's reverse. First transfer entry and then the bank entry for rest of all the installment. Let's start, students. So bank entry. This is bank entry I am asking for application. So tell me bank entry. It's very easy. Money is coming in. So bank account debit. Debit what comes in? To equity share application account. You write your calculation in bracket. Company is asking for 2.50 paisa. And how many shares we have offered? 20,000. How many applications we have received? 15,000. So which number of shares you will consider, students? Yes, you are right. It's under subscription. You will take 15,000. Why? Because you have received application of 15,000 shares only with the application money. So 15,000 into 2.5. Let's check. 15,000 into 2.5. 37,500. Okay, I'm not writing narration. You can refer to narration in the textbook. I can say to you orally, like what will be your entry, narration for this, being application money received. It's very simple. You can refer to textbook for narrations. Okay, now transfer entry. You know, students, what we have to do in transfer entry. This is a temporary account. You want to close this. You have created in the credit effect. Now to close it, what effect to give? Debit. Equity share application account debit to equity share capital account. You are transferring application money to capital account. How much you received? 37,500. Same amount you will transfer. And what will be your narration for this? Being application money transferred to capital account. Now we are done with the application. Now we are passing entry for allotment. Allotment ka first you will pass transfer entry. So tell me, students, what is your transfer entry? Now you have a very good hand of it. You have understood. So what you will do? Temporary account you will write first. Equity share allotment account debit to equity share capital account. This is your transfer entry. Now the new thing which you have to consider here. At the time of allotment, company is asking for a premium. Now just before I explain you, premium money is collected. Company is getting extra money, so it's a profit. And what effect to give for a profit? You will give credit effect for the profit which companies are earning. So credit all incomes and gains. So I am going to credit this profit. What account to use, students, for this? You are going to use securities premium reserve account. So this is what the account you will be using for the premium. Securities premium reserve account. In short, we call it as SPR account. Securities premium reserve account. Let's write the calculation in bracket. How much money company is asking at the time of allotment? 4 rupees. So you will write 4 into how many shares? You will consider this. This is under subscription ka sum. So take 15,000. So 4 into 15,000. Out of this 4 rupees, how much is share money? Share ka money is 3 and premium money is 1. So write calculation for capital money. Capital money is 3 and premium money is 1. So this is how you will write your calculation. On allotment, company is asking for 4 rupees. Out of 4 rupees, 3 rupees is for share money and 1 rupee is for premium money. Premium money you will put it in SPR account, and share money you will put it in capital account. Now let's write down the amounts. So 15,000 into 4 is 60,000. This will be premium money will be 15,000. 15 into 3 is 45,000. So this is your entry, transfer entry for along with premium. So whenever premium is given, remember students, this is your premium account which you will be crediting if it is given in the sum, and premium ka entry is always credited in the transfer entry. Now this premium money can also be at the time of first call, or it can also be at the time of final call, whichever installment you are always going to credit, because it's a profit. And in which entry you have to credit? Transfer entry, not in bank entry. You will always credit premium at the time of transfer entry. Now it's very easy. Tell me bank entry of this allotment ka bank entry. You are receiving this money. So receiving means coming in. Bank account debit what comes in to equity share allotment account. How much we asked for equity share allotment? 60,000. So we have received full money, 60,000 being allotment money received. That is your narration. So we are done with the allotment. Now we are doing first call. So tell me students, first call ka transfer entry, equity share first call account debit to equity share capital account. Now let's write down the calculation. How much company asked for at the time of first call? 1.5. So 1.50 into 15,000. This is under subscription ka sum. So you will take 15,000 shares. 15,000 into 1.5, 22,500. This is what you have received. So narration. What will be narration? This is a transfer entry, sorry. So transfer entry, what will be your narration? Being first call money due, or you can write being first call money transferred. And what will be your bank entry, students? It's very easy. Money is coming in. Bank account debit to equity share first call account, 22,500. What will be your narration for this? Being first call money received. So we are done with the first call. Final call, very easy now. Final call, again 2 entries. Tell me final call ka transfer entry, equity share, very good students. Equity share final call account debit to equity share capital account. Now it's very easy. You might be finding it very easy now. Transfer entry is very easy. Equity share final call account debit to equity share capital account. Now let's write down the calculation. How much company is asking? 3 rupees. So 3 into how many shares? We have received application. We have received application for 15,000 shares. So multiply by 15,000, not with the offer shares. You have to always take application received. 45,000. So this is your transfer entry, being narration, being final call money due. Now bank entry. Money is coming in. Bank account debit to equity share final call account. Same amount you have received, 45,000, being final call money received. This is how we solve sum with the premium. Thank you students.